morning again, everybody. Welcome back to Squawk here on CNBC, first in business worldwide. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Our guest host today is Wisconsin Senator Ron Johnson. We've been watching the futures this morning. They have been down throughout the morning. It started with things in Asia today, as you saw a sell-off there. Right now, those Dow futures down by about 74 points below fair value. S&Ps are off by almost 9.
And some big news that we're following this morning. European Union leaders meeting today in Brussels. They're expected to sign off on a permanent rescue fund for the Eurozone and agree on a balanced budget rule in national legislation. Greece's prime minister seeking backing from party leaders for a very unpopular reform package. A long-awaited debt relief deal for the near-bankrupt country seems almost secured. International leaders, though, want proof Athens will take action on reforms before they hand over funds from a €130 billion bailout. And in deal news this morning, manufacturer Thomas & Betts being acquired by Switzerland's ABB for $72 a share in cash, or about $3.9 billion. As we talked about in the last hour, that's a 24% premium over the stock's Friday closing price, and the highest price that the stock, I think, as you said, Joe, has ever been.
Right.
Joe.
On a long-term chart. GOP frontrunners Mitt Romney and Newt Gingrich hoping for a decisive victory in tomorrow's Florida primary. Joining us now is Kellyanne Conway. She's the senior advisor to the Gingrich presidential campaign. You saw that we had her in a paired in a smackdown for the ages with Kevin Madden, but Kevin's not here. I don't know. I think it's our fault or something with the car. I don't know what happened, but
problem.
I
sent his car on a detour.
You know what? Knowing you,
no, I love Kevin. But we also
'cause
know what he'd say, and Romney gets plenty of help by the media, so you might as well just have a new person.
You're
here.
right, but now you got Sarah Palin on your side. So what did she say? I can't do her accent. I wish I could, because it's almost like Fargo. But she said something like, "Yeah, make a liberal mad."
I wish I could shoot my own dinner too.
Yeah.
Well, no, she's making a very important point. The extension of the 2010 elections into 2012 would be the classic establishment versus the non-establishment.
Mm-hmm.
And the beauty of 2010, with 87 new House members, was those people who we probably couldn't pick out of a lineup, they ran on a message. They didn't carpet bomb their opponents with money. Most of them were the underfunded, unknown candidates who were told, you can't win because we didn't say you could.
Okay, but
we didn't pick you. So this will shape up as that as we move on.
Florida, let's just, for argument's sake, say that Romney wins Florida, and let's say he wins comfortably. Where's the next... What's the word I'm looking for? The firewall for Gingrich, where to stop the momentum for Romney. Where would it be?
Sure. We're not seeding Florida, just like we didn't seed Iowa, South Carolina, which he didn't win either. But we like the way the calendar looks moving forward. First of all, there's proportional delegation now, not winner take all. That's a huge benefit when you have two true front runners. They will be able to share the vote, the delegates in each of these states. That's a big boon for us. Secondly, if you look at the upcoming states and then you look at Super Tuesday includes Newt's home state of Georgia. That's 76 delegates. It includes Tennessee, Oklahoma. The next week is Mississippi, Alabama. We feel as we go into the South, the calendar looks good. And we also feel in some of these caucus states that are coming up that Ron Paul could do well there too. We can also, because if you transpose just the sheer volume of our crowds in Florida, the Florida reporters have said we're in the thousands and thousands, Romney and Santorum in the hundreds and hundreds. If that translates into the type of caucus situation in some of these more hospitable states, we feel like we could do it.
Would you take anything back, Kellyanne? I mean, what I mean by this is, does an establishment candidate imply that he's for the free markets? He's for capitalism. He doesn't think Goldman Sachs is a pejorative. He doesn't think that wealth accumulation and becoming very successful.
The speaker doesn't think those either.
Well, he certainly does seem like it. You've seen.
I've seen the caricatures.
It's been beyond the pale, some of the stuff that he said, and it's damaged capitalism and it's damaged the Republican Party.
I don't think it's damaged capitalism. I think we're a great country and people understand how capitalism works. But I don't think he gave an inch to David Axelrod in the White House either. They want to run against Mitt Romney. They're ready for him.
Well, they got all their talking points.
They're ready for him. No, they already had that. Let me tell you something. David Axelrod doesn't need my help.
I know they already have him, but you didn't need it.
But let me say something. I think true capitalism is shown by who's got an economic and jobs growth vision, Joe. I'm still waiting. Governor Romney's out there every day pounding Newt. He never once this entire weekend, sir, said, and here's my flat tax plan. He doesn't have one. Here's my zero capital gains plan. He doesn't have one. We have both. We treat everybody the same under the tax code with 15% flat tax across the board, 0% capital gains so you can unleash investment. That's a true capitalist. Romney only talks about Newt. And, you know, small people talk about other people. Big people talk about ideas. I'd like for him to talk about his ideas.
You know, they talk about lowering the rate, but there's no talk about what that ultimately means. Meaning, you're going to be bringing in a lot less money, but there hasn't been a real conversation about then where the cuts are going to come to match that on the other end.
But there's
been a lot of conversation about somehow that we have too much debt and that the president is blowing up the debt. However, the tax plan unto itself, if you don't do something on the other side of the ledger, is going to blow up our debt even more.
But that just assumes static. That assumes a static economy. And Newt's position is that if you take the business tax, for example, from 35 to 12.5, not to 25, where Romney wants to put it, because Romney wants to give us an even playing field with other countries.
You're about to say evil playing field. I could tell.
I know, because I so am.
Freudian slip, right?
Even playing field. Newt says, why an even playing field? I want to give the U.S. an advantage. 12.5% business tax. And then what does it do? Instead of then looking for where do we cut, you say that makes us more competitive. People want to do business here then, and it unleashes that.
And you think you grow the base? What happens if you don't?
Then we'll take a look at it. I mean, this is what bold people do. Tough times need tough leaders. I don't think people in this country want another people pleaser. I think they want a tough leader who's got bold solutions.
Is there an argument to be made that President Bush lowered tax rates and did not bring in the revenue that he expected? Did not broaden the base the way he expected in terms of what ultimately happened to the economy?
I'm not sure what he expected, but a sort of perfect storm was created through housing and through the cost of 9/11, frankly, afterwards, and the dip in the economy. So you're going to have to ask the Bush people that. But in any event, there's just, if you go on newt.org and you look at these solutions and you go on Mitt Romney's website, you see who the true capital is in terms of your money and moving forward.
Kellyanne, is there a point where we stop focusing our fire on each other and we start focusing on President Obama and the harm he's caused our economy? I mean, that's, as a Republican, I think that's what we're hoping to see. The sooner the better. I
would prefer that than all this pablum that Mitt Romney's the only one who could beat Barack Obama because it's not provable. That's like the people who said he just made history by winning Iowa and New Hampshire. And he's going to seal it in South Carolina. Wrong again, and it hurt us in early voting in Florida because people said I want to back a winner, and they backed the guy who they were told was going to win 3. He won 1 in his backyard. But going to your question, we should train the fire in Obama, but I don't know how you do that when your health care plan provided the inspirational blueprint for Obama's health care plan. You can't put a piece of tissue paper between Obamacare and Romneycare, and the average grassroots supporter knows that. But you're going to really have to ask your question, Senator, to Mitt Romney. Ask him why he and his super PAC have spent over $16 million big ones in Florida, taking down, saying that Newt takes the wings off of butterflies. He has not spent a dime, as far as I can see, not one dime in mail, on the radio, and TV talking about his record as governor. That is the only position of voter trust he has ever held. He's been elected to one office, never talks about his record of governor. I don't blame him. It's terrible.
Gingrich has done his own share of spending on negative campaigns. He's the one who bought the movie that was when Mitt Romney came to town. It was his super PAC.
It was his super PAC, and he disavowed them.
It was his super PAC who spent that money, though.
Something Mitt Romney has never done, disavowed a super PAC. He always goes like this: I haven't seen those ads. He is the only person in Florida, not even in Florida politics, he's the only person in Florida I can find who hasn't seen his ads. But Newt Gingrich started to do a positive campaign in Iowa. Let's go back 3-4 weeks. We tried to do a positive campaign in Iowa. We wanted to debate on the issues, and we got carpet bombed there and came in 4th. And so we're just trying to defend ourselves. But $4 million worth, versus $16 million.
Kelly, I'm happy to make the suggestion the Republican candidates start showing the Republican primary voters how they will defeat President Obama and his ideology. That's really what we're hungering for.
I hear you. And I know, sir, that in your magical, miraculous campaign where you didn't carpet bomb your opponent and could have with your own money, that you took it right to Obama. You took it right to Obamacare. You took it right to the bailouts. I mean, we followed your campaign very closely. And I think that is still the way to run in 2012. The way to defeat Obama in 2012 is the way it was done in 2010. The issues are the same. Obamacare is the gift that keeps on giving. President Obama looks at it as the crown jewel of his domestic agenda. And we look at it as a natural byproduct of Romneycare.
Just lay out the facts.
Jack Welch tweeted just the other day that the Republican candidate should be very nice to Ron Paul because he could be very important down the road. I did notice in the debates that when Ron Paul had taken a turn on Newt Gingrich, he didn't lash out back at him, and I've noticed the same thing with Romney. Is there a sense that the candidates are looking at Ron Paul and his supporters very closely for help down the road?
Well, they ought to. Of course, his foreign policy views are frightening, but he's got a lot to say about the gold standard and the return to King Dollar and sound money, which people like me and others, many others, really appreciate. He also, the 76-year-old curmudgeon is also tapped into the millennial vote. Yeah. The under 30 crowd loves him, and there's something to be said there.
Kellyanne, in-trade isn't the end-all be-all, obviously, but let's say Romney's at 85, 90% or whatever. Let's just, for argument's sake, say that he becomes the eventual nominee. Have you, the scorched earth, I mean, you're great. If he wanted you on board with him against Obama, can you come back and do that at this point? Can Gingrich come back and do that at this point?
Yeah, well, those are two separate questions. Newt said today on a different network that he, of course, will support the Republican nominee and do what he can to defeat Barack Obama. No, me especially. Of course I'll help. Look, and I'll tell you, I'm an expert on the women's vote. Barack Obama got 56% of the women's vote in 2008. I can't over-exaggerate to you what a high number that is for a non-incumbent. It is an incredibly high number. Bill Clinton, Babe Magnet, 47% in his first election, 1992, 54% as an incumbent. Ronald Reagan lost to Jimmy Carter in beat Jimmy Carter in 1980, but lost him among women. My first job in polling, my first boss in polling, Dick Wirthlin, coined the term the gender gap. Turned around in 1984 as an incumbent and won 55% of the female vote with Geraldine Ferraro on the Democratic ticket. Women are very pro-incumbent. So we as a Republican Party have a huge hill to climb among women against an incumbent who the first time out got 56% of the vote. So of course I'll be there. Okay. But I'm going to be there for Newt. After Florida, 5% of all delegates will have been awarded. We've got 95% of delegates, 46 states to go.
Is he on 3 and counting or 2 and counting in terms of huge comebacks? He's on at least 2 or maybe close to
every good cat has 9 lives. So we'll be having fun here.
All right. Thank you.
Thank you all.
Okay.
Coming up, with low interest rates and uncertainty in the markets, what's the safest bet for your portfolio? Hirsch Cohen's going to tell us next. He's the Chief Investment Officer of Legg Mason's Clearbridge Advisors with $8 billion under management. And then still to come, we're going to talk business, politics, and the Super Bowl with Stephen Ross, the chairman and CEO of the related companies and the owner of the Miami Dolphins. Squawk Box coming back with that and a lot more.
A car is either luxury or it isn't. If you want a luxury car with a standard power moonroof, your options are going to be limited. If you want standard leather-trimmed seats, you're going to have even fewer. And if you want standard keyless access, then your choice is obvious. The Lexus ES. It's complete luxury in a class full of compromises. See your Lexus dealer.
At LendingTree, mortgage rates are shockingly low. A 5/1 ARM is just 2.5%, so refinance now to save thousands. Only LendingTree gives you up to 4 competitive offers, so you get the best loan guaranteed. Go to LendingTree.com today.
We now offer your family phone service as low as $1.70 a month with Magic Jack Plus. As low as $19.95 a year. $19.95 a year. No computer needed. Keep your old phone number. Start saving today. Available at Walmart.
The markets keep moving. Make sure the news keeps coming with Thinkorswim by TD Ameritrade. Use the news links breaking stories with possible breakout stocks, options with potential opportunity, futures and Forex with in-depth analysis. It's an all-you-can-eat buffet for all things trading. Thinkorswim by TD Ameritrade. It doesn't just deliver news, it's making news. Trade commission-free for 60 days, plus get up to $600 when you open an account.
The global markets hit home when the closing bells ring in Europe. How will their volatility affect the U.S. markets? The best team in business tracks Europe's every move. Squawk on the Street, the European close. 11:25 a.m. Eastern, today on CNBC.
Inventors, do you have an idea for an invention or a new product? InventHelp can help you try to patent your idea and submit it to companies. InventHelp is America's largest invention company with sales offices in over 50 cities nationwide. Call today for your free information.
Is credit card debt stressing you out? BSI, an accredited nonprofit organization, has been helping people like you to affordably consolidate monthly bills, reduce high interest rates, stop late fees, and end collection calls. You can always rely on BSI to offer you the very best solution to your personal situation, as they have since 1996. Call us. Let BSI start eliminating your credit card stress now.
We now offer your family phone service as low as $1.70 a month with Magic Jack Plus. As low as $19.95 a year. $19.95 a year. No computer needed. Keep your old phone number. Start saving today. Available at Walmart.
Welcome back to Squawk Box on this Monday morning. The future's not looking good. Dow would open up about 70 points lower. S&P 500 would be off about 9 points. And the NASDAQ would be off about 17.5 points. We have some deal news just crossing the wires. Auto parts retailer Pep Boys, one of this morning's movers. It's being acquired by investment firm Gores Group for $15 a share in cash. That's a 24% premium over Friday's closing price. But take a look at a 10-year chart on this thing. It is not necessarily such a good thing. Back in 2004, they were close to $30, about 29 bucks and a half. And if you took it back even farther than that, this was a stock that lived in the $40 range back in the 90s. So some questions about Pep Boys. Gores obviously trying to fix this thing up. For those of you trying to watch which banks are backing these deals, B of A, Merrill Lynch advised Pep Boys on this transaction. And I noticed the Credit Suisse, Barclays, and Sagent were working for Gores. Beck.
Okay. With uncertainty abounding from Washington to Europe, our next guest says that the best place to put your money is in high-quality stocks. Joining us right now is Hirsch Cohen. He is Senior Portfolio Manager and Chief Investment Officer of ClearBridge Advisors. That's a Legg Mason company. And Hirsch, thanks for coming in today.
Thank you.
Now, this idea of going into high-quality stocks, it's one that you've been talking about for a couple of years at this point. You think it's really the Fed that's pushing people there?
2 years ago, every call I was getting was from people who were saying, I have a CD expiring or Treasury bill. Where can I get higher returns with no risk? Well, so of course you can't. There is no such place. I said, but then you start looking at high quality common stocks where the price earnings ratios were low, earnings yields were high, the dividends were higher up front than they had been in years. You had higher yields on dividend-paying stocks than you had in bonds, high-quality bonds for the first time since the mid-1950s. And so on an absolute and relative basis, it seemed to be the place to go. In terms of quality, it's an interesting thing. I think Bernanke is definitely forcing people out on the risk curve. And I think he's trying desperately to reflate the economy. Meantime, I think Europe is doing their best to deflate things, and whether they know it or not, with their fiscal policies, draconian fiscal policies. And so I think you want to come down on the side of quality in that environment.
But Hirsch, 2 years ago, it was not a common idea for people to be doing things like that. It was a more novel idea. 2 years later, we hear from a lot of people who are looking for dividend-paying stocks, and you start to chase the yield, or you start to chase what's been happening with a lot of other people going there. Is there a point where you say, "Hold on, this is an overtraded crowd"?
I've been asked that, is the trade overcrowded? I think you're talking a decades-long investment. A view that's important on a short-term basis. Yeah, it's become popular in the media. Have individuals embraced it? I wonder. I think you saw outflows out of equity funds all last year. Maybe some money was going into equity income funds, which is good. Mm-hmm. But I think on balance, people are investing with a rearview mirror. You had people legitimately scared out of the market, and unfortunately, I think we're losing a generation of investors at a time when they probably ought to be thinking about and buying high-quality stocks. And if you're thinking about the next 3 months, who knows? But if you're thinking about the next 5, 10, 20 years, I can tell you from experience that stocks actually work and dividends actually work, and the compounding effect is enormous.
So this is a generational call, and that's why you still see a lot of value here. For big names, like I noticed some of the names that we just flashed were Procter & Gamble, Walmart, some of the big Dow components like a Microsoft.
Right. Microsoft is and a dividend aristocrat of the future, surprisingly enough. They've started, and so people like the dividend aristocrats. We're also, in addition, owning a lot of the great dividend payers from the past. We're also looking at things like Time Warner or Microsoft or DuPont, which we think can be dividend aristocrats of the future. It's interesting, if I could take 1 second. I sat with people are get so short-term oriented, and we're all victims of relative performance pressures in this game. And then I sat with the management of Kimberly-Clark the other day, and I'm thinking, they have headwinds in Europe and their cost pressures and so on. And then you think, they've raised their dividend every year for 40 consecutive years. It's yielding over 4%. They're doing everything right. It's a great management team. And so, why would anybody sell this? It's like a bond with a rising coupon. You could say the same thing about Heinz or 3M or Exxon or Chevron. And so I think people think, I don't know what's going to be over the next 3 months, but there's so many of these great companies that do all the right things for shareholders. So, it's not a new idea for me, but I think people would benefit from focusing on it.
And you think that the media has overplayed this? We've heard this talked about more than people have actually put their money where their mouth is.
That's what I think, definitely. Yeah. So it's not an overcrowded trade if you think that people would invest in these stocks in the next 5, 10, or 20 years, which is the way it should be. Over a long-term basis, earnings, dividend yields, and stock prices the graphs will probably superimpose. On a short-term basis, like 2008, you can get dividends up, earnings up, and stock prices get killed. So
we got to get through 2012 and
I agree.
And December. When is the world supposed to end? Because if the world is going to end, I want to be really liquid. I want to be totally in cash.
Well, in the Cuban Missile Crisis, that's when the market bottomed, because people said, well, if we get a nuclear war, it doesn't matter. You might as well invest. That's
but
when
I mean, if it actually does end, I need.
You want liquidity if it ends?
I want to be totally in cash.
Yeah.
At that point. Because it's not going to be good for any.
When you get to the pearly gates, you have the.
No, but I think there is something to the notion that we talked about before you came on, Hirsch, and that is 4%. These companies raise their dividend every year. A lot of them. They sell Kleenex or whatever you want to use for an example, ketchup, Scotch tape, whatever it is. So you got 4%. They're going to raise their dividend. The only thing that really scares you is it's something in Europe or something that we don't know about, the next black swan that is so horrific that you really need gold instead of anything else.
And use it to. I try to use it to our advantage. We at ClearBridge, we try to do our buying during the periods of volatility. You get the downward volatility. If you chase stock, we make it too hard. There's going to be enormous volatility.
What are people really afraid of right now? Europe?
Well, that certainly was in the news towards the end of last year. What are people really afraid of?
They must be afraid of something.
In a broad sense, they're afraid of losing money. They're afraid of losing everything.
Right. Who would be in cash when Verizon is yielding whatever it is?
You tell me.
Well, I don't know. I don't know why, and it's like there's some.
Verizon, AT&T has raised its dividend every year for 28 consecutive years. I know all the warts on Verizon and AT&T, but the dividends are there. So.
All right. Hirsch, I want to thank you very much for coming in today.
You're welcome.
It's been a pleasure talking to you. Thank you.
All right, coming up, find out which movie topped the weekend box office, and still to come, the data point of the morning, personal income and spending, due out at 8:30 a.m. Eastern. Squawk Box will be right back.
Tomorrow on Squawk Box, the profit pipeline from Eli Lilly chairman and CEO John Lechleiter, plus a preview of the Florida primary with DNC chair Debbie Wasserman Schultz. Squawk Box, starting at 6 a.m. Eastern.
For our town, for our country, for our future. This isn't just the car we wanted to build. It's the car America had to build. The extended range electric Chevy Volt. From the heart of Detroit to the health of the country, Chevy runs deep.
You do not need to spend $1,000 per month for timely market information. You can get it all for $69 plus vendor-associated fees when applicable from Interactive Brokers. And you do not have to have a brokerage account with us to subscribe. Organize and analyze timely data or news on the IB information system. Interactive Brokers. Stocks, options, futures, forex, bonds worldwide from one account.
A refrigerator has never been hacked. An online virus has never attacked a corkboard. Give your customers the added feeling of security a printed statement or receipt provides. With mail. It's good for your business and even better for your customers. For safe and secure ways to stay connected, visit USPS.com/mail.
What's happened to us? How did we end up here at the mercy of a power outlet?
Come on, people, we're better than this. I'm talking to you. And you. Off the floor, everyone. Up, up, up.
Now boarding business class now boarding.
It's time for an Ultrabook with the longest battery life. The HP Folio, inspired by Intel and powered by the Intel Core i5 processor, starting at $999. Get yours at participating partners.
As Wall Street prepares for the most anticipated IPO of the year, go inside the true story of Facebook.
I knew nothing about what a company would be worth.
As you've never seen before, Mark Zuckerberg, Inside Facebook, 10 Eastern, CNBC tonight.
One dark night on a deserted country road, 3 shots ring out. Who shot the lawyer and murdered his wife?
This was a murder for money.
A twisted new American breed, Wednesday on CNBC.
Business Intelligence. CNBC.
Welcome back to Squawk Box, everyone. At the top of the box office this weekend, The Gray, starring Liam Neeson. The action thriller about survival in Alaska brought in $20 million. The Gray is the second film release from Open Road Films. That's a distributor created by theater chains AMC and Regal. And vampire movie Underworld Awakening came in second with $12.5 million. One for the Money, starring Katherine Heigl, that came in with $11.8 million. Andrew?
Coming up, we've got breaking economic data, personal income and spending numbers for December. As we head to a break, take a look at Pep Boys, just acquired by Gores. Take a look at it. You're going to see this. That's what it looked like last week. You can't even. We should show what happened on Monday. That's after a Barron story, and then of course there's going to be questions about whether rumors rumors about a potential transaction were in the market. I haven't heard anything, but I can bet you the SEC will take a look. Squawk Box coming back right after the break.
Let's start over from the beginning.
We were just driving along, coming back from the lake, and all of a sudden, kablam! It blindsided us.
What is it?
Our college savings account.
How do you think it happened?
Not sure. I think something we bought a while ago turned out to be something else, and I remember a lot of other stuff in there had the word aggressive in it.
Is everyone okay?
Well, now, yeah. Who knows later?
As a registered investment advisor, my first commitment is to my clients. I depend on a custodian with a fully integrated technology platform, and I have full confidence that they won't compete with me. I know that they'll be there when I need them most, freeing up more time for me to take care of my clients. That's why I chose Trade PMR, brokerage and custody services for registered investment advisors.
We now offer your family phone service as low as $1.70 a month with Magic Jack Plus. As low as $19.95 a year. $19.95 a year. No computer needed. Keep your old phone number. Start saving today. Available at Walmart.
Yeah, it's a big mess. But don't worry, cleanup's already underway.
When the things that matter most are on the line, make sure we are too. The disaster recovery team at 1-800-SERVE-PRO. Like it never even happened.
Today, where's the beef? Maybe in your portfolio. See if Wendy's CEO is serving up tasty earnings. Then rich boys and their toys. Back in style? Jim's got the 411 on the new trend to spend. Get fast, go mad. 5 Eastern on CNBC.
Look closely. This $50 Buffalo gold piece is the first United States coin ever struck using .9999, that's 4 nines, pure 24-karat gold. The U.S. government had to stop production because of a shortage of specially made gold blanks. It's no wonder the price of this edition is going through the roof. Now you can reserve your own copy clad in 14 milligrams of pure gold. The final issue price was to be set at $50 per proof, but now this private non-monetary gold-clad masterpiece can be yours for only $9.95. With gold skyrocketing, price can only be guaranteed for 7 days. Each new 2012 $50 gold Buffalo Tribute proof is clad in 14 milligrams of pure gold, is proof struck, and utilizes the famous Buffalo nickel design. Strict limit of 5 proofs per caller. You must hurry. Call now.
Call 1-800-493-5129, 1-800-493-5129. Strict limit of 5 proofs per caller. Call 1-800-493-5129.
You can feel it. Really, I think we're less than a minute away from personal income and spending data for December, and it's palpable. We hope we get this right. We don't have Rick down here. We've got Scott Nation standing by at the CME. We don't want to put a lot of pressure on you, Scott, but if you screw this up, this will be the last time. Also standing by, Steve Leisman joins us from Philadelphia. Have you seen the number already, Scott, or is it going to hit?
No,
huh?
We still got four seconds, Joe.
Oh, so you could screw it up theoretically.
Here it is. Actually, up 0.5 for income, a little bit better than expected. Spending is unched, and that's actually 1/10 lower than expected. Deflator up 2.4 is 2.4, and that's actually a better measure of inflation. I think it's the measure that most people down here use. Expected 2.3, so just a tiny bit higher than expected. Equities are essentially unched. The futures were down 10 handles just before the number. They're down 9.5 right now. And the same is pretty much true for rates. The 10-year was at about 1.83.5 just before the numbers came out. Pretty much right there. I think what we're going to see today is that these numbers, unfortunately, aren't going to do much for our markets. I think that at least as far as the U.S. equities are concerned, we're starting to realize that deja vu is not a French word. It's a Greek word for, oh, my God, here we go again.
Wow. Wow.
Very good.
Wow.
I thought that was, and when he said aunch, and he was very TV friendly, I thought that was.
I laughed.
He knew all the expectations. He had a funny saying.
I mean, I laughed. I cried.
Well done, Scott.
2 thumbs up, 4 stars. That was amazing.
That's good. It's not
guys, I have spent some time in my life in a trading pit. I'm kind of used to the vibe down here.
But you know what? It's tough, though, Scott, to do it in the TV way, because you know what you're doing as a trader and going through, but then taking that information, making it understandable for everybody at home, it's not an easy thing to do. Well done.
I mean, thank you. Now we're going to watch Leisman if you want to see the opposite of what you just did. For more on the no. How you doing, Steve? My man.
Never better, Joe. Never better.
Anything that was better than people thought? 0.5, right?
Yeah, the income numbers are better, and that you might expect is the jobs numbers, the better jobs showing up in there. What's really interesting, though, is that people aren't spending that income, and so what you had, you might expect this is an increase in the savings rate. And by the way, I just want to point out, I thought Scott did an excellent job, and I think he should be in line for the number 1 substitute right there. What you had is a savings rate go up to 4% from 3.5%. By the way, guys, this is a really closely followed metric, and the reason is because we don't know in this kind of post-recessionary lackluster growth environment what Americans feel the right level of their savings is. We've been up as high as 5 and change, maybe even 6, I think, at one point, and that came back down. A lot of the spending we had in the better quarters in the end of the year came from a reduction in the savings rate. Now it's back up, and we have to see is it a temporary blip or not, but it's kind of gone against what you would expect. As confidence fell, the savings rate fell. You'd expect that to go the other way. Now confidence is on the way back up, and we expect savings to go down, but savings is going back up. So it's a real wild card in most forecasts.
All right, I'm tired of this number already. Tell me what's going to happen on Friday.
Yeah, I know. I was just about to get there. I want to show you the forecast, but I want to put a big asterisk next to it and a caution here, because the reason is that payroll number is very high at 150. A lot of the forecasts I've seen are more like 100, 125 from some of the bigger Wall Street firms that are out there. And I did look at the details, and no offense or anything, but a lot of the no-name firms seem to be picking up or driving up the average. There's some guys out there with 200, 210. So I would think the 150, if you were to look at more at the bigger Wall Street companies, would be more like 125.
Steve, do we know
right there
anything that these weird aberrations that people talk, temporary workers, the holiday,
right.
Anything get reversed this month? Or?
Well, precisely. That's why people think the actual underlying growth rate may really be, or jobs rate may really be in the 175 area, but a lot of guys guys are taking off the couriers that were put on, the mild weather kind of thing. So they're thinking that there's going to be something of a snapback or a payback period in the month of January. So let me just go through these. ADP's 180, that's the private sector, 370 on jobless claims, 150 with an asterisk for the payroll for Friday with 175 private, unemployment rate at 8.5%. And just real quick, Joe, I look at a lot of the commentary over the weekend. There's a pretty good expectation for a first quarter growth slowdown from the 2.8 we had. I saw UBS at 1.5%, a lot of other guys at 2%. So that's sort of the number that's out there for the first quarter.
If people are out there that have stopped looking, you know, we're at the 64% instead of 66. If they saw these last couple of numbers get better, do they think maybe there's some jobs out there? I'm going to start looking again. I mean, do they come back into the workforce?
They would come back in. That's right. Now there's a whole issue, Joe, and I'm going to do something on this on Thursday, I hope, which is to look at this whole participation rate story and how much of that is demographic and how much is economic. Because there's a huge. What's interesting is it's kind of a political story, and I've been talking to a bunch of what I hope are objective economists to try to figure out how much of this is demographic, because, you know, the aging population does create something of a downward drag on participation rate, but there's also the economics part. I'm going to try to see if I can work with these guys in their econometric gobbledygook stuff and see if we can disaggregate how much is demographic and how much is really economic.
Where are you?
I'm in Philly. Oh, good. Thank you, Joe. You're so kind. I'm in Philly to interview Charles Plosser, which will be one of the first Fed interviews in the wake of that, you know, landmark historic statement, the publication of interest rates. Charlie's no longer a voter, but he is on the communications committee that created this whole thing. So I'm going to ask him to explain what these things mean. And you remember that story we talked about last week, which was the difference between what was in the forecast and what was in the statement. Hopefully he'll be able to put that together for us and explain what are they talking about.
I wasn't trying to help you. I was wondering who did your makeup down there.
Why, is it terrible?
No, it's good. It's good. It's just a little different. Your eyebrows, they went wild on those things. You look very, very stern, serious, and a lot of gravitas, I thought. Yeah, can you see him, Scott? Doesn't he?
Joe, I can't see him.
You can't? All right. Never mind.
I wish I could see him. I'd like to see him in a bow tie again.
Oh, yeah,
hey,
that's
Scott,
right, the three of them.
Scott, Joe's middle name is Disarming. That's what he does.
I try to.
You think you're good? Boom. Cut your knees off.
Right.
It's always fun.
Leaseman, so that's Thursday. I'm interested in that. Is it me, or did this last period between the two jobless employment Fridays, it just flew by, did it not? I mean, it's unbelievable.
I can't believe January is gone, you know, and we haven't had any snow, and it's gone. I'm already thinking about fishing in the spring.
I know.
I'm already working on.
I'm not complaining. All right.
Now, Joe, we did have some news. You know, now that we're in the earnings cycle, middle of the earnings cycle, I think that's why it went so fast. And you know, our market is actually ignoring the fact that earnings, at least for S&P companies, have been pretty good.
Yeah. All right, and you're going to be. We can catch you, Scott, on CNBC's Option Action. That's on Fridays, right?
Yeah, it is, Joe. And you know what? When you come down to the floor of the CME, I'll show you where Rick stands and how little information Rick does this with. It's actually amazing.
It is. All right, and he'll be back.
Doesn't get to see your pretty face.
No, that's the downside. All right, thanks, guys.
Exactly.
All right.
Coming up, Miami Dolphins owner and chairman and CEO of the related companies, Stephen Ross. He's headed to the set and ready to sound off on politics and the Florida primary. Squawk Box coming back right after this.
I'm going to Miami. Welcome to Miami. Yo, I heard the rain.
There's a place I dream about where the sun never goes out and the sky is deep and blue. Won't you take me there with you?
Miami is now ready for
fly without putting your life on pause. Be yourself, non-stop. American Airlines.
How does this 70-year-old doctor have the body of a 30-year-old? The answer is Cenegenics. GQ suggests that Cenegenics is the path to reversing the signs and symptoms of aging.
Cenegenics changed my life. I'm 70, but I feel like I'm 30.
You are getting older, but with a call to Cenegenics today, you can start on the road to looking younger, a lot younger.
My libido was like I was 18 again. So the desire is there constantly.
I went from 260 pounds to 190 pounds, and I feel great.
Experienced medical doctors have created Cenogenics to decrease your body fat and increase your muscle tone, strength, sex drive, and energy. Cenogenics is not a pill, a fad diet, or a surgical procedure. It is a customized health program that can make you look and feel years younger. Call Cenogenics now for a free consultation.
Call 1-877-280-3639.
Hey, Clark, what you got there?
It's my number. It's the amount I need to save to retire the way I want. Is that your number?
Yeah.
A gazillion, huh?
Bazillion. It's just a guesstimation.
Oh, how do you plan for that?
Well, I blindly throw money at it and hope something good happens.
So you really don't have a plan?
I really don't.
Do you know your number? We can help you find yours and take steps to get there. Learn more at ing.com/US.
As Wall Street prepares for the most anticipated IPO of the year, go inside the true story of Facebook.
I knew nothing about what a company would be worth.
As you've never seen before. Mark Zuckerberg, Inside Facebook, 10 Eastern, CNBC tonight.
One dark night on a deserted country road, 3 shots ring out. Who shot the lawyer and murdered his wife?
This was a murder for money.
A twisted new American Greed, Wednesday on CNBC.
Welcome back to Squawk Box. The futures are actually taking a turn for the worse recently. Right now, those Dow futures are down by about 91 points. That's the worst levels we've seen all morning. S&Ps are off by over 11 points. And part of this could be because of some of the headlines that are coming out of Europe. We know that EU summit is happening today. More of the talk that's coming out at this point is coming from people like Merkel, who is saying that at this point, the fiscal pact results are good. They'll look at some final issues today. Also, though, the UK's Cameron's making some statements about how they really need to get serious about the growth agenda in Europe, and that seems to be what's been missing to this point.
You'd think things would get better today, but maybe it got priced in on Friday with the news that there was an expectation a deal would be reached. In the meantime, Mitt Romney and Newt Gingrich facing off in Florida's primary tomorrow. Joining us now with his impressions of the race, Stephen Ross, founder, chairman, and CEO of the related companies, also a Romney supporter and owner of the Miami Dolphins. You were just in Florida over the weekend and had a big fundraiser for Romney at your house, about 2 weeks ago now?
About 2 weeks ago. Yeah.
So before we came on, Joe asked you the right question. He said, I thought you were a Democrat.
Well, I'm an independent.
And so how did you become a Romney backer?
Well, I think right now, I think this country needs Romney. I've followed Romney's career, and I don't think there's anybody really that in politics today who has the background that Romney had, being such a successful businessman, and then hitting up the Olympics, doing something good for the country, and then being successful as a governor in Massachusetts. I think it's an extraordinary opportunity for America that we have a candidate like Romney that can come in these times and kind of.
Did you know him in business?
No.
So this is when did you get behind him?
I got behind him when he was going to run the first time, and looking at the other candidates and his background and thinking what would be best for the country. And then I got to know him, and I think the more I know him, the more I've kind of respected him, and I really believe that we're lucky that we have a candidate like him in these times.
So when you were down there this weekend, just give us a little flavor.
Well, I mean, you start seeing all these character assassinations against Mitt.
You can't go anywhere without seeing it, right? It's on TV, it's the robocalls, everything.
Exactly. I mean, well, both of them, are really at this point. But I think that, admit when you start going after his character, I mean, you're going in an area that people really feel comfortable. You're going overboard because this isn't that type of guy.
And do you think that Romney's making the right decision by going after Newt as aggressively as he is?
Well, I think he's responding. I think people always question, was Romney a real guy? This was too good. And I think this has really shown him that he is feisty, that he is a real person, and that you can go after him for so long. And so I think this is kind of showing what Mitt's all about and why he will be a great leader for this country.
So, Stephen, as a business guy, what do you think the number one thing this country needs to address in order to get the economy going again?
Well, it's jobs. It's really bringing the business community back into the mainstream, where the jobs aren't going to be created by the government. And I think today involving businessmen and making this country what it was and what we want it to be, I think he can lead us that way. It's about leadership.
So basically getting government out of the way and let the private sector grow.
Exactly.
Concentrate on that.
Exactly.
I wanted to talk real estate if I could move it there, unless you want to go more politics. You just raised about $845 million, I think,
Yes,
for a new
for an opportunity fund.
For an opportunity fund, and my question is, where do you think you're going to put this to work? And by the way, do you not put it to work until after the election?
Well, I think now you might even find better opportunities. I mean, if Romney's elected, I think things might get better and prices might go up because people will be more optimistic. But there's still a lot of distressed, real estate that's out there that banks have kind of kept on their balance sheets, waiting for something to happen.
What states are you looking at?
Well, New York, Florida, California.
You just did a partnership with Danny Meyer, my old friend Danny Meyer,
Sure.
Shake Shack. Have you guys been to the Shake Shack?
No.
If you know about Shake Shack?
We passed
And it's not on your diet.
No, it's not. But we passed it again, and my wife commented, "You can't pass
Lines
it."
out the door.
Unbelievable. Yeah,
Right.
at all times. Yeah, and she goes, "God, it must be great." And then both of us said, "There's
Not worth
nothing
the
there
line.
for us."
So what are you going to be doing with Danny?
Well, we entered a joint venture to do in this catering and special events, and putting it in a lot of our projects, and in sports stadiums, Shake Shacks. There's one in the City Field for the New York Mets and Washington Nationals.
8th Avenue, is that one?
There is one on 8th Avenue. There's one near
Yeah.
Gramercy Park. They're
Standing
all-
room.
Down the park,
SRO.
it's
Yeah.
in the park. You gotta.
Yeah.
Yeah.
It's unbelievable.
And we'll be putting in our Hudson Yards project.
When's that going to
begin?
begin?
This year.
This year? It's actually finally going.
Anything good happening with the Dolphins?
Yeah, we have a new coach.
I know you missed that. What happened to the other guy? Did you want the other guy?
I like the new coach. Let's put it that way.
I thought he was going to get Peyton Manning. What's going on there?
Well, Peyton Manning still, is part of the Indianapolis Colts. I think any team would love to have Peyton Manning, but I think you have to see if they're going to release them or not.
Did you make any money this year?
We did kind of broke even a little bit. It was a great year for the NFL.
It was.
It was a really good year.
You gonna hang? Are you long term with the Dolphins?
Absolutely.
Really?
Sure. We're going to be in this, we're not this year, but...
You're asking him if he's going to sell the Dolphins? Is that what you're trying to get at?
I get inquiries once in a while about, it's a great business to be in. I mean, it's fun, right? You love it.
You love it when you win. Let's put it that way. It's not so much...
the beginning, the first, how many games were...
Well, we were 0-7, so, and that didn't help too much. But
you see all this stuff. You didn't bring anything. This guy, I mean... I think you
brought
need a
product.
new logo. This is just, I don't know. I don't know about
well, let's put it this way. I hope the Dolphins now have the success that the Packers have had with our new coach coming from Green Bay.
Yeah, thanks, by the way.
Okay, final question. Who do you want for this weekend?
The Giants.
The Giants?
Why?
Why? Why?
Well, I mean, they're surging. I mean, you look and see, right now the momentum seems to be with them. And I think they have a great defense. And, Bob Kraft's done a great job, and Tom Brady, it's hard to bet against.
Right. But is there a little bit of the underdog thing going for you?
Well, you live in New York.
He's a
and
New
you read the
Yorker.
papers,
Right.
how you not going to really get caught up in that.
Okay.
What a great, who was it? Mike Jackson just talking about Eli, the working man. The Giants are down in the trenches, and then you got
blue collar.
You got
versus,
Giselle
right.
and Tom out in the Pacific Palisades in the mansion, and the perfect couple of all time. And Brady looks like he looks like Fabio, only better looking and bigger. So it's a great dynamic. It's great for football.
He's even more chiseled.
He's even more chiseled than Fabio. So it's an unbelievable matchup.
Well, it's a great matchup, especially since the game is in Indianapolis.
Yeah, that too. That too.
So
with the Manning and everything else.
Yeah.
You gonna? Can I drag you into this?
You're dragging me into this. I'm dragged in. Stephen Ross, thanks for joining us this morning.
Thank you.
Appreciate it
Pleasure
very
being
much.
here.
And I do say go Giants because I'm a New Yorker.
Good. Hold on. Coming up, we're going to head down to the New York Stock Exchange for the latest buzz from Wall Street. Squawk Box coming right back.
Ready or not, the stock of the day is coming up. You're watching Squawk Box on CNBC. First in business worldwide.
A car is either luxury or it isn't. If you want a luxury car with a standard power moonroof, your options are going to be limited. If you want standard leather-trimmed seats, you're going to have even fewer. And if you want standard keyless access, then your choice is obvious. The Lexus ES. It's complete luxury in a class full of compromises. See your Lexus dealer.
Oh, those were the best of days. I still feel the summer rays that graced our back since we went down
When your car is more than just a car to you, the right insurance matters. Are you getting the coverage options you need and the discounts you deserve? For an agent or quote, call 800-MY-COVERAGE or visit travelers.com.
Options Express, where you can trade your favorite products all in one account. Keep watch on the markets, or use our exclusive tools to help find ideas. It's powerful, easy-to-use technology for trading stocks, options, and futures. Keep trading whether you're at home, in the office, or on the go. Options Express, the brokers smart traders deserve. Open an account today at optionsexpress.com.
The global markets hit home when the closing bells ring in Europe. How will their volatility affect the U.S. markets? The best team in business tracks Europe's every move. Squawk on the Street, the European close. 11:25 a.m. Eastern, today on CNBC.
Is too much paper slowing down the productivity in your business? Well, maybe it's finally time you tried a Neat Desk scanner and organizer. A Neat Desk is like a digital filing cabinet that can scan business cards, receipts, contracts, all your business documents. The NeatWorks software then automatically recognizes and organizes the key information on your documents, allowing you to quickly generate expense reports, tax reports, and spending reports, and then export them into several of the most popular accounting programs. And business cards can go directly into your contact list and then sync right into your smartphone. Best of all, virtually any business record automatically becomes a searchable document that you can find with a simple keyword. And now, for a limited time, if you call or visit us at tryneat.com, you can try a Neat Desk or the amazing Neat Portable Scanner for 30 days absolutely free. In fact, we'll even pay for the return postage if you decide to send it back. So give us a call or go to tryneat.com and see how much more productive your business can be.
Welcome back to Squawk Box. The futures at this point down by about 83 points for the Dow futures. S&Ps are off by over 11.5 points. Let's get down to the New York Stock Exchange. Carl, Melissa, and Jim join us right now. And guys, we've been watching the futures this morning, been getting weaker throughout the morning. You have any thoughts as to why that might be?
Well, you got some Portugal CDS is blowing out a little bit today. The 10-year at a euro high, a euro era high. One of those great mornings, Beck, where the red carpet arrivals happen at this EU summit, and we're going to watch those leaders arrive, although Merkel now suggesting, guys, that there will be no thorough discussion of Greece.
I mean, that really just is everything. I mean, you've got all weekend that there's going to be a Greece deal, and then Merkel comes out. Merkel, who is clearly running the show, says, look, there's no Greece deal. It's funny. These people are so concerned about austerity, you never hear growth. Without any growth in the Caterpillar projection of what's going to happen later in the second half, it's just not going to work. Merkel has to start recognizing that we need growth as well as austerity. She's totally on the austerity path, and hence we're down.
Yeah, you know, guys, the UK's David Cameron was making some comments like that about how they really need to focus on the growth plans for Europe, how that has been left out of the equation to this point.
Well, they don't know how to do it. It just seems to be not their mandate. Come in here and you listen to what they're saying, and you think, well, geez, you know, they don't really care if they go in recession. What they care about is somehow being able to have a deal, a budget deal. But you can't make the receipts without growth. We've seen it time and again. I don't know where they think that the money's going to come from.
Yeah. At this point in the rally also, there are some doubts about whether or not the financial rally can persist. Goldman Sachs downgrading Bank of America, lifting a couple of others, but there's this whole notion of what kind of exposure do these banks have, what percentage of it is actually hedged through CDS. Even if it's hedged, do they actually get a payout if there's a default that triggers the CDS? And I think at this point, with the banks up so much for this year, there are some real concerns out there as to whether or not they can continue, and so therefore, can the markets overall continue as well? So
brightest spot is the Citi upgrade, working on that. They reiterate Wells Fargo. This is Goldman Sachs. But the Bank of America downgrade is chilling. And the fact is, J.P. Morgan fully valued. I come back to the fact that J.P. Morgan's quarter was just not so hot. We revere Jamie Dimon too much. Hey, look, he's the greatest guy. He knows how to schmooze. I need a quarter. I don't need a schmoozer.
Okay. Wow. Guys, what else do you have coming up on the show today?
We're going to talk a little bit about, we're going to talk to Steve Case, first of all, who's ringing the bell this morning. And we'll also talk about the golden cross on the S&P, very bullish technical indicator. And we'll tell you guys what it historically has meant for the market 6 months after that. Pretty good, if in fact it happens.
All right. Carl, Melissa, Jim, we will see you in just a few minutes.
30%. Going to help Carl Quintanilla. Carl
Candunita.
Candunita, or yeah, just the Cantonia is.
That was a Squawk word one-time moment. Yeah.
No, it was not just.
I didn't do it more than once. Carl, I'm sure, could probably find me doing it.
Does it? Coming up, some final thoughts.
Not anymore. It's not anymore.
Your final thoughts from our guest host, Senator Ron Johnson. Tomorrow on Squawk Box, we have a special lineup for the Florida primary. Former Florida Senator George Lemieux, Connie Mack, Republican Congressman from Florida, and Representative Debbie Wasserman Schultz, Democrat from Florida, and, of course, DNC Chair. Squawk Box is coming right back.
What's happened to us? How did we end up here at the mercy of a power outlet?
Come on, people, we're better than this. I'm talking to you. And you. Off the floor, everyone. Up, up, up.
Now boarding business class now boarding.
It's time for an Ultrabook with the longest battery life. The HP Folio, inspired by Intel and powered by the Intel Core i5 processor, starting at $999. Get yours at participating partners.
Each day, our planet awakens with signs of opportunity. But with opportunity comes risk. And to manage this risk, the world turns to CME Group. We help farmers lock in future prices. Banks manage interest rate changes. And airlines hedge fuel costs. All so they can manage their risks and move forward. It's simply a matter of following the signs. They all lead here. CME Group, how the world advances.
Hey, TradeStation. You're not the only one who sets automated exits to manage your trading risk.
You set automatic exits on your platform? Name one.
Q's at 41.
And if the market tanks?
41.
If volatility spikes?
41.
Now, with TradeStation, you can set dynamic stops for a higher level of trade management, and they'll help you set it up. Easy.
Is 41 how many years you've been stuck in the middle?
We'll meet you where you are and help you elevate your game. Sign up now and trade free for 90 days. Trading has risks.
The Hyundai Genesis. In a new, faster acting formula. Zero to 60 in less time than a Porsche Panamera S. The 429 horsepower Genesis R-Spec from Hyundai.
We now offer phone service as low as $1.70 a month with Magic Jack Plus. That's $19.95 a year. $19.95 a year. No computer needed. Nothing changes. And now keep your old phone number. Get Magic Jack Plus at Radio Shack.
This week at Office Max, get a free 10-pack of Duracell AA batteries when you buy $50 in national brand ink. Free batteries. It's a big deal. Find all the big deals at Office Max.
It's earnings season, and this is Earnings Central. Tomorrow on Squawk Box, cashing in on components, reports from big oil to big pharma. And on Closing Bell, will this internet giant kindle record profits? Earnings Central, CNBC tomorrow.
Stock of the day is Pep Boys. The auto parts retailer is being acquired by Gores Group for $15 a share, and it was a big winner, as you can see, last week. Andrew, we did find out that it had been mentioned positively in Barron's
over the weekend, except that
the previous weekend.
But it doesn't account for what happened on Thursday, the 18th.
The day before, right. Which was before the Barron's
Which was before
stuff.
the Barron's piece, where you saw a big spike.
So if you were in, like in the movie Wall Street, if you were in the stock watch area where all those like
Blue Star,
guys, I think Blue Horseshoe loved Pep Boys.
But where did you think they got the leak? Was it from the Barron's stuff that was going to mention it positively, or was it about the deal?
You look three places. Manny, Mo, or Jack.
That's
you look
true.
at one of those guys, and in the past,
their bunny has a good nose.
Mo can't keep his mouth shut. I mean, he's yapping all the time about stuff. So I would, he's the guy. Anyway, let's get, they're all dead, I think. They were the founders. Let's get some parting shots. Maybe not. I want to do that. Let's get some parting shots from just currently unavailable. Senator Ron Johnson, member of the Appropriations and Budget Committee. You've been on a rant today just about, you want what a lot of Republicans talk about, get the government out of the economy, let the private sector take over again, and we'll get growth.
It's what Kramer's talking about in Europe, growth.
Yeah.
I mean, the number one component of a solution is we have to grow our economy. Why don't I want to increase taxes? Because it harms economic growth. I mean, how many jobs is a particular tax increase going to create? So everything we do, we've got to clear out regulations, certainly not add more regulatory burden in this economy. That's got to be our focus. And from my standpoint, the metrics you look at really is the size of government. We've hit 25%. We're on a trajectory to go to 35% just in the federal government. Add in state and local, right? We're currently at 40. Greece is at 47%. Total government relationship size to our economy. It's a horrible metric. And then take a look at our debt to GDP ratio, over 100% right now. Again, that's going to inhibit economic growth. And so everything we should be doing should be concentrating on growing our economy, growing small to medium-sized businesses, because those are the job creators. And we were talking earlier about the regulatory burden. You're saying the big businesses don't mind it. I know. They've got the compliance officers. They've got the government affairs departments. Right. Small businesses don't. They can't cope with it. Small community banks, they're getting killed by Dodd-Frank. And that really is the lifeblood of the U.S. economy. Startup businesses,
it's an argument
community
for simplifying
banks.
the tax code, too.
Absolutely. Get rid of it.
Andrew keep that?
I'm going to keep this.
Yeah, I've taken away from you and given it to Andrew because he's going to put it on.
How about that?
How do you feel? You can have the tie.
She said, we got to go. Ron, thanks for being here. Make sure you join us tomorrow. Squawk on the Street begins right now.
Looks good on him.